All right, so we are live. So on the same day that we saw Tesla stock hit an all-time high at $487, within minutes the stock fell to $440, a $50 swing. This most likely had something to do with the Fed's comments about inflation next year, but could also be just normal correction after massive leaps over the last several weeks. So what's happening? What can we expect over the coming weeks and months? We've got the bulls here with us today. We've got Alexandra Mertz, the Tesla boomer mama, the queen. You got Mr. Incredible, the rational bull, Jeff Lutz, the Froyo tycoon and options bull, Xander Sky. And joining us this week is Larry Goldberg, the golden bull. Good morning, everybody. How are you all doing?
Morning. Great.
Morning,
Herbert, and you.
Okay, I'm doing great. Obviously, despite the fluctuations of the stock, I think it's pretty normal. What we can start off with, I think, is all of these executives of Tesla executives have been making a number of announcements just this week, of course, and some of them are pretty interesting. So let's start with that. You got Elon Musk saying this sometime a few days ago last week, and I thought it was important to pull out. He said, "The path to overwhelming victory is clear, but a massive amount of work remains." I just think that this is so bullish. Overwhelming victory is clear. We could talk about that. You got Ashok Goswami basically announcing that version 13.2.1, not even 13.3, they're rolling that out wide to all AI4 customers. There'll also be a holiday vehicle update, software update, and there will be a version 12.6 for AI3 customers. Then this came out this morning. We don't know how true this is, but there was apparently emails from Tesla to Austin talking about using Austin as the pilot city for robotaxi. And this discussion started apparently in May, and they've been trying to work this out. So I think it's looking like it's going to probably start there. You got Franz, chief designer for Tesla at the Peterson Museum. He did his great interview, basically talking about everything about the CyberCab. One of the points he made was that the CyberCab will never get a steering wheel. That's quite interesting. You got Grace Tao, a global vice president of Tesla, said a couple things. She said all Teslas sold in China are already ready for fully autonomous driving in terms of hardware. They also are starting to test actual Smart 7 and Auto Park in China. That's on top of news that it was launched in South Korea. And then she said this, all Tesla vehicles on sale now use AMD chips with computing power of up to 10 teraflops. Its smoothness is more than that of most laptops. Ooh, so I just pulled those out because I thought it was interesting. So why don't we start with you, Larry? Which of those are you excited about?
All of the above. I mean, they're firing on all cylinders. There's a lot of confidence at every level, I would say, at Tesla. I'm not sure, by the way, that quote from Elon referred to the government of the United States or the government of Tesla. It's unclear to me. But my goodness, they're firing on all cylinders. I think that the expectations for 25 are pretty high. I always looked at 25 as the major transition year, and that is coming to pass. I think there are going to be a lot of bumps in the road, but I did try out 13.1.2 yesterday and was extremely pleased. Extremely pleased. In the Cybertruck, it's not quite as good, I understand, as in the YN3. I guess they're still dialing in Cybertruck's dimensions and so on. I know that 12.6 did scrape my mudguard a little bit for me. But, version 13 is really, I think they are getting very close to the mark, very, very close to the mark. It drives like a human being. There's no doubt about it. I believe implicitly in all those videos I've been watching because I've experienced it myself. There's a lot more intelligence to 13 than there was in 12.x. It's very apparent, and I think there's a lot of improvement to be made, and I'm sure that it's coming because I think they're in the final stretch. That's why I'm feeling so bullish about 2025.
Nice. Thank you so much, Larry. Well, let's get back to FSD and all these other events. Let's do a roundtable on what's happening with the stock. Why don't we start with you, Alexandra? What do you think's been going on in the stock?
The stock is correcting a little bit. It's obviously completely linked to the Fed. It's going to take a couple of days to recuperate. I still think they're going to run into the year end. There's still lots of fund managers that are interested in buying and getting at least back to the benchmark because they were underweight. If I would have to buy, I think this is the right moment to add. Unfortunately, I have to add beginning of the year for all my retirement funds and all that. So I still have to be a little bit patient. But, I don't think it was healthy to just run up, up, up. It's nice to get used to that again, but we shouldn't. We shouldn't forget the last 3 years that were painful, and just appreciate the moment when it does, and stay calm when it corrects like that. I mean, come on, guys, we're at 435. 2 months ago, we were at 260, 70. So I don't think there is any need to worry. I still maintain that there may be more correction in January, just because there may be fund managers that are getting back out again, just that they doing this for window dressing. So there may be a couple more buying opportunities in January.
Can you explain this? Oops, I thought I was sharing it. This is from ARK Invest. Can you explain this?
Oh yeah, I love this. So this was a table that one of our followers published, because he tracked what ARK Invest was predicting in the different years. So the first line is what they said on March 25th for 2024. And then so obviously we have split since, so he adjusted those in the two lines, split by the two splits divided by 15. So at that day when they did that on March 25th, the stock was at 35.
They did it on March 25th, 2020, and they were predicting what is going to be by 2024.
Exactly. And so that very day, the stock was just below 36. And they said that bear case was 100 for 2024. Now, do remember, that is where the stock stopped. So they got the bear case right. The base case was 466.67, which corresponds to 7,000 when pre-split. So that was their number, which is exactly where we were 3 days ago. And the bull case was 1,000. So we're obviously not at 1,000. That was because they thought that autonomy was already here. That's the bull case. And then in the next two lines, you have their predictions a year later for 2025. Now the stock price was compared to that at 218. Now their bear case for 2025 next year is 500, be my guest. Base case is 1,000, be even more my guest. Actually come and camp in my garden. And the bull case is 1.3. Exactly. So the bull case is not that much higher, because they were still in their whole anticipation that we would have had autonomy by 2024. And so then it goes on.
So so in March of 2021, when they were predicting what it will be by 2025, this is what they said. And then 22, is that because every year they always do a kind of like a 5-year?
They do, exactly. They do.
4 years?
Exactly what they do. And then it actually changed in 2025 and didn't do a 4-year horizon anymore, but did a 5-year horizon. You see that on the bottom.
So right now, in June of 2020.
And I actually think they're very conservative for 27 and 29. And that is because none of these scenarios yet have the bot in them.
Exactly. So they're saying that as of June 2024, what they're predicting by 2029 is that the stock will be at $2,600.
Yeah, which is very conservative, in my view. Sorry, not financial advice, Jeff. Don't get mad at me.
I never get mad.
All right, let's keep going through what is happening with the stock. Xander, what was your view of what's happening?
Well, just like Alexandra said, this is normal. Got to zoom out. When in doubt, zoom out. So I have a forcing function that helps me deal with the gyrations all the way up. I keep selling, and as I'm rebuying the stock, I change my mind regarding like options and leaps. So as we start to get into these frothy levels, I de-risk, and so that way I could just sit in stock and not worry about it. But the forcing function of continuously selling all the way up, it forces me to kind of zoom back out and look at the cost basis and say, like, is my position size correct? Am I leveraging? What if I was leveraged, which I was? I start de-risking on the way up. My philosophy is that you want to use margin when the stock is undervalued, not potentially, in the eyes of whoever's judging it, overvalued. So I de-risked all the way up. Even in my long-term portfolio, I'm completely out of margin. That way I don't get myself into trouble in case a black swan comes, or like this, you have a flash crash. Now, we still don't know, is this just a flash crash, or is the market going to correct here and use the opportunity, government shutdowns, all of this stuff. But the rationale on Tesla doesn't change for me. I don't forget the autonomy. I don't forget robo-taxis. It's all coming, and this is par for the course.
Yeah. And then Jeff?
Yeah, obviously a huge move. I think we're all the way back to whatever a week ago, where the stock was somewhere in that area. It's fine. There's certainly a window passing the previous all-time high. Will probably serve as decent support. We'll see how it goes. I mean, yesterday the market was served a bit of a hawkish cut from the Fed. I would say a bit. It was fairly hawkish cut, and to me it was a very bizarre set of statements, bizarre meeting. On one hand, and really, it's almost like almost a mechanical response in the market, like something just bizarre mechanical response, because the underlying economy is very strong, as reported. GDP, job growth is on the, I would say on the lower end of where they wanted to see it. And inflation has come down considerably over the last year, but it's certainly the rate of reduction has evened off in the last couple of months. So you had this rhetoric from the Fed, and you had this visceral reaction from the market, and things had been kind of floating up for a couple of weeks prior. But if you look at all these stocks and look at several of the indices, they're really just kind of coming back to where they were maybe a few days ago in the case of Tesla, or a few weeks ago in the case of many stocks. So definitely kind of zoom out and kind of consider it that way. But in terms of Tesla, the story hasn't, nothing's changed in the last week in terms of the story. If anything, things are adding to it. You're hearing the executives come out. You flash through all those different things that are commentary from the executives, and they're very bullish on what they're building. And so I think we're just in this period of, this was a company building EVs that has a really good supply chain and built this battery supply chain supercharger network. I'm not saying that book is closed. Like, they're very good at that. It's actually funded the next book. And then this next book is autonomy, robots, and in generalized real world AI. And they've set themselves up beautifully from a cash position perspective, from their leadership in EV, and they have a home for what they're building. They have 8 million homes right now in terms of when they deploy their solution. Nobody else has this. So I think when you're going through these periods, I kind of liken it to like reentry of a rocket coming back into the Earth's atmosphere. There's all kinds of things that are happening that are somewhat nonlinear, and so I'm sure there'll be ups and downs, but I think we're entering that next book, and it's in terms of like who's there and like who's there on the other side of it from a competitive perspective. I actually view the gap between Tesla and what they're building and the competition has only grown actually over the last number of years, even though many other people have entered into EV, even though there are other robotaxi services. But when you actually look at the scale, the performance, the cost structure, and what they're building, and you look at the product portfolio, to me the gap has only grown over the last year. So that's the way I'd like to look at it.
Yeah, the gap's only grown. You guys, I think both of you said that the most important thing, of course, is the path to robotaxi. And right now, if you kind of weigh it right now, it looks like that things are happening the way we expect it to happen if robotaxi is supposed to be rolled out mid-year, right? It's on path so far, as opposed to, is there any signals so far that could be negative that maybe we aren't going to hit that milestone that they predicted, right? You've got, of course, this Austin announcement. Where am I? What's going on here? It's not an announcement, I'm sorry. It's just kind of unearthed an email that was sent from a Tesla employee to Austin. It was I think it was a public records request by Bloomberg, and they found out that Tesla employee has been communicating with the City of Austin Autonomous Vehicle Task Force since May. Because that's one of the things that some of the bears are saying. They're saying that, well, how could Tesla actually roll out a commercial robotaxi program when they haven't even started getting the application to California or Texas? It took Waymo a couple of years longer for the first time that they finally got it, and then it only took them 4 months to get the next city. But that's one example. You've got FSD version 13 rolling out. It seems like they rolled out 13.2, not 13.3. Wide release the AA4. It's delayed based on what we all thought, Thanksgiving, but yet what's being received here, it's Canada as well, it's Cybertruck as well. It's not AI3, but they'd already telegraphed that was the case. Then you've got Grace Tao. This is her pointing out that if you take a look at the screen here, looks like she might have the screen at home. Or well, I don't know what this is. Is that her? I don't know. It's like a car with the drapes around it or something like that. But she's playing around with it, showing you how incredible this is. And she said basically all cars that Tesla makes in China are ready for robotaxi or autonomous driving. So, and then you got, of course, the CyberCab. And here you got Franz saying this is never going to have a steering wheel. Just the confidence level that this is actually happening. Anybody want to jump in on that?
Herbert, I mean, all I'll say is I'd like to hand it over to probably Larry next. The only quick thing I will say is there's been a bit of a gift handed, and the gift is Wall Street, and there's many good people on Wall Street. There's no question about it. But a lot of the wrong questions have been asked, and a lot of it's kind of like almost like walking down the wrong hallway or in a building, and trying to get to the final destination. And I think it's going to be difficult for a single analyst to kind of unpack this and kind of figure out where this is going. There's some of them are making that attempt. You're seeing them chasing the stock price up, and when you look at this thing like this, they obviously filed for something in Austin in terms of so there's data out there, okay. And then the other thing, you look at 2 weeks ago, this Model Q's supposed statement that came out of a Deutsche Bank meeting. All that was page 10 and the lower paragraph on page 10 in the earnings deck reiterated by the head of communications from Tesla. But you had a lot of people come out and say, wow, they're building this new thing. This is happening. It's really happening. No, they said it was happening in the lower paragraph in page 10 in the earnings deck. So I actually think that there's some very good work being done out there, but there is a preponderance of like really poor work being done out there. And it's really important to understand the company, understand what they're building, when they say things, when they don't say things, and really read between the lines in terms of what they're doing, because there's a lot of, I think a lot of bad information out there. So it's not surprising, but it honestly depends if you're asking the right questions and you're looking in the right places.
Larry did talk about his experience with FSD 13, and you did too. And you said, wow, it felt like I was controlling the car with my mind. It did everything I wanted it to do to the way I wanted to. Elon retweeted this. And in our private chat, you like 5 times, you couldn't help yourself. It is blowing your mind at the next hour. So do you want to just make a comment about your experience with
quickly
13.2 so far?
Well, the way I would quantify it for people is on a year ago. I think this is what, when you have something new like this, it's really important to kind of look at relative improvement on several different scales. You can do it on a unit of one, but you also really need to look at it across the fleet. But in my experience, a year ago on V11, I was probably using FSD, 10, 20, 30% of the time, in terms of the percent of my drives where I would engage FSD. And then when we got into the 12 series, especially with no nag, I think there was after 12.3, maybe 12.4, I kicked it up to about 70 or 80% of my drives. But I still, disengaged. You know, I had to deal with speed. You know, things weren't adjusting properly. So I still 70, 80% of the time. My experience with 13.2.1 is, to me, I don't feel like I need the human drive anymore. I think it can now flip to 100%. Will there be a situation? Yeah, but to me, every time I get in the car now, I'm just gonna say where I want to go and press one button and go. And that, to me, that relative improvement over the last year for me is very compelling to me, both in terms of like how I follow the company, what I, you know, my time horizon for investment. It was very important to me, that progression of going from 30% to 70, 80% to 100%.
Okay. And then, Larry, do you want to answer that question? Is FSD on track? Is robotaxi, is commercialized robotaxi on track?
You know, there are specific edge cases that I've identified that are not solved yet. 13.2 actually closed the gap on the two of them, but there are probably a set of maybe 4 or 5 general cases, and then within those, you know, some very specific cases. So I'd have to say that we're somewhere between 6 and 12 months away from pure robotaxi and pure FSD. But in terms of directionally, this has been a step. The move to, you know, to end is a step change improvement that looks like we're going to get to the bottom of this.
Mm-hmm. Yeah. So personally, I think we're on track based on the things I just said. But also, if you take a look at this, which is this is the release update for 13. This is what it includes. Down here, it doesn't even include the 3 times model size scaling, the 3 times model context line scaling. This is compute, and this is based on what Tesla has 85,000 H100s right now. Yeah. And that's about to 10x and another 10x when they get to B200s within 6 months. So in the next 3 months, by March, it's going to be much, much higher. And they're apparently using Colossus, supercomputer as well for FSD. When that comes in, and FSD 13 is already so good, that's the key thing, right? Whether or not we're going to stay on track to that scaling.
Yeah, I mean, the trend is very clear. It's very clear. We're on the road, and there are, I think, a family of edge cases that you could identify, principally related to specialized signs, school buses. There's still some lane issues to be dealt with, but all of these are truly edge cases. But I think that the product is very solid. I mean, it's very, very solid. So I'm very comfortable with the progress. I had targeted mid of next year. I think that's a realistic goal. Certainly not later than the end of the year. I think one of the things that give me pause is just how long it takes between these cycles. We're supposed to have 13 drop on Thanksgiving. Before Thanksgiving, it kind of dropped before Christmas. That's not bad compared to where we've been in the past. And if they continue improving the cycle time, what it looks to me is like the whole, testing cycle and the whole cycle of release is contracting. That's a very good sign in software development.
Mm-hmm. When they released it in Thanksgiving, it was already released to a small group of people, like 5 or 6 people, customers, non-Tesla employees. But then they held it back for a month but everybody, I think Chuck Cook was saying, why are you holding this back? This is really good. It's really safe already. Why do you guys think that they might have held it back?
That's the nature of testing. So what you want to do is you want to get the completed packaged end product out to a group of users. This is user acceptance testing, and you want to see the acceptance by the users. And you have to choose your users quite carefully. I mean, for example, Omars is a great user, but maybe not the perfect user acceptance tester because he's, on board, very on board with the product. You need somebody with a little bit more skepticism. You need a pretty wide range of users. This is classic. But the fact that they're getting it to users and they're cycling from those testers into the general public so quickly now, just look back over time, you can see the compression of this timescale. As you see compression with new releases, as you see, so all of these are very, very good signs. This is just the nature of software. And when you're dealing with, software that is human safety critical, you have to be awfully, awfully careful. And they've done a great job. They've done a great job of that, I must say.
Mm-hmm.
Yeah, I second that, and it's not only the pace of releases and then the span across models so quickly, and there's so many different hardware configurations that we don't necessarily see when you look at the outside of our Tesla that they have to plan for, and they're getting them across all these models very quickly. That is a very, very good sign in their confidence in the build process, their internal testing, all this, and it shows you the bug list is actually smaller, and so yeah, this is a very good sign in software development quality testing. What we're seeing.
Did you notice just how quickly the release came out between, say, the 3 and the Y, or the classic cars and the Cybertruck? So it looks like they've got the model of the different variants. They've got that dialed in pretty well. I'm not saying perfectly, but they've got that dialed in pretty well. That'll happen with version 3 as well over time. So, these are the pointers that you look for in software development. And the pointers are how rapid and how smooth are those UAT, and how rapid and how smooth are the multiple hardware versions released. And so what we're beginning to see is production level software. It's not production level yet. We've still got a ways to go, but we are seeing progress towards that.
Do you guys think that FSD 13 goes out? It's only with the AI4 cars right now and Cybertruck. So I think I've seen estimates. Do you guys know the number of AI4 cars out there? It's like maybe some people say it's 15% of the cars in the US might have it. And then, but when that comes out and everybody starts playing with it next month, is that going to get more people, in fact, the institutional investors, where they get more excited about this as well?
I don't know that there's going to. I mean, I think I don't know. I'd be interested in other people's view. I think we're probably 3 to 6 months away. I mean, Camino's drive in New York was very important. We need more people like Camino to be driving, in these difficult circumstances. People think that FSD is specific to particular areas. It's not. It has nothing to do with specificity to particular areas like Southern California. That's nonsense. I've driven my car back and forth across the country. Yes, there are some road markings and road systems that are better than others, and so the car drives better in those environments. But it's not locale specific.
Okay. Alexandra, maybe you can answer this question. So in the last week, we had all these price targets increases from Mizuho to 515, Dan Ives, of course, 515. He started it, and then others are following now to the 515s. You got Daiwa to 420, Goldman 345, Morgan 400, Bank of America 400, Guggenheim to 175. The Dan Ives started this. None of the 12 Wall Street analysts, except for Dan and the other two, are even higher than the current stock price, and the average is 275 still. Any thoughts, Alexandra, on what's happening with the institutional analysts?
With pleasure. I mean, I think the last couple of years have just shown in so many ways that all of these traditional players, and I'm not saying all like 100%, but most of them are just sheep, be it in the political landscape, trying to, never stick their head out, being it in the financial analyst work. There are a couple of really good ones. We spoke about Kathy Wood before. I have my issues with their fund management, which is catered to their clients. I mean, it's just the way it is. We don't think it's logical, but if that's where your money comes from, that's what you're going to do. But on their fundamental analysis, even though I didn't like the Monte Carlo model, they were obviously spot on. There was nobody who said it. And I think what they are right is having a 4 to 5 year perspective. All these guys you just quoted, including Dan Ives, which I think is still the better one of those, have a 6 to 12 months horizon and are doing this to generate money flow through their brokerages. That's what's happening. So there is a direct link to then institutional investors using their brokerages and hence giving them their commission to do it. So they have to do it because they don't want to be seen as lagging or late or whatever. And they are probably having some spreadsheets somewhere. Now, I mean, I've been following Tesla for 4.5 years. And initially I tried as well, because that's where, I came from as a fund manager, to push Tesla into a spreadsheet. And I just realized that that's not going to work. That there's just, there's too much opportunity and too much risk involved to be able to have the security of numbers. So in every Excel cell, you're doing assumptions and hoping you're on the right path. But I mean, by the multitude of Excel cases that you have actually no certitude about, the whole thing is just worth nothing. So it's their business model. Like journalism is in a bad place, I think financial analysts with their price target is currently in a bad place. I hope this is getting better. Either they admit that they have actually no clue, or they're going to give a much longer time horizon and a much more fundamental analysis, and then this may be getting to a better place.
Go ahead, Xander. I've lost my control here. Can you switch it?
Alexander can maybe.
There you go. Yep.
So, well, first of all, I forgot the question because we just hit 420.69. So I'm over here buying shares. What was the question?
Yeah, let's take a look at the stock here. Right now, it's 423. It's continued to fall. But again, if you guys, like you were saying, if you look at the 5-day, it's not as terrible as everybody's saying it is. If you look at the 1 month, you can see that it's back to where we were, like you said a while ago. But why is it falling? It continues to fall. It's just following from it's not the economy, right? It's not because of what happened yesterday, is it?
Well, look, if you're a bear, right, there's always a counterparty. So if you're a bear and you're watching this thing rocket and you got blown up, at some point you're going to, or even if you didn't get blown up, but you were patient, at some point you're going to pull the trigger and try to make money. The Fed created uncertainty. You have macro risk here with government shutdown. So all of that creates an uneasy investor. And then, long term and even medium term, like the thesis doesn't change. It's just, when the thing goes up, it inevitably they're going to try, right? And so I'm hats off to anyone shorting here, and you have to look at your long-term picture, like averaging in here back at 420, like it makes sense. Can we go lower? Of course, right? We went up very very quickly. So you just zoom out 1 month and your P&L is still green. So it's just a question of, like, is 400 going to hold, or as I think Jeff said, is the previous all-time high can act as support. So I'm not worried here. I think that it's healthy for the market to pull back and to contemplate. whether they want to continue to hold a position or not. And so let's just see what happens. I expect a big rip back up from these levels for today. But next week is historically it's supposed to be a Santa rally. The data and statistics are on our side, but the uncertainty of government trying to hand the next administration a steaming pile of poop is obviously on the table.
Given the stock just fell today and yesterday, you guys change your expectations of what you're shooting for by the end of this year? Alexandra, last time we spoke, you were thinking we're going to hit over 500. Do you still think that maybe?
I mean, again, short term, I'm gambling with my options. That's all. I don't even consider them part of my Tesla investment. My Tesla investment is on my stock, right? So I have a couple of options and I gamble with them. And for me, that's a pure gamble, right? And I hate losing that money, but I also like, doubling and tripling it. But it's nothing to do with my fundamental analysis of Tesla and what I do. So whether with these options I'm making money, because obviously at 500 I'll make more money. I'm already still making a lot of money, but because I bought them so much lower. There are 300 mid-January and 340 mid-August. So I'm far in the money and I'm still making a lot of money on them. But this blip of a correction from 480 to 420 is certainly not going to change a iota of anything that I believe about Tesla and the stock. Nothing.
Any guess though? Are you by the end of this year, by next,
Yeah, I still think we can go up. I told you earlier, I still think there's a lot of window dressing going on. It started obviously in December and they're in there, but a lot of institutions and fund managers are still underweight Tesla because the amount of underweight was just so enormous that it didn't all happen yet. So I still believe that there will be more purchases happening this year. Yes.
Anybody else? Anybody want to jump on that?
We mustn't forget that we've added a significant variable to the Tesla stock price that we didn't have in the past, and that is this political variable. Mm-hmm. So the stock shouldn't be, but it is somewhat reflecting sentiment, political sentiment, and that is going to change day by day. I mean, what Elon has just forced is absolutely unique in the American political experience. Absolutely unique. There's never been a player going back as long as I can remember, and I started following American politics in the time of Dwight D. Eisenhower. I don't remember a time when a non-elected civilian official of the US government has had quite the impact that this advisor to the president-elect has had. I can't remember it. I think Harry Hopkins in the time of Franklin Delano Roosevelt may be the exemplar. But all I can say is that we have to be aware of the potential for, some degree of variability related to some of the actions that Elon takes and has got to take from a political perspective. I think that this move that he's made is going to be very beneficial to the economic soundness of this country. And remember, it is the economic soundness of the American economy that gives us the leadership role that we have in the world today. It's not our military strength. It is absolutely our economic strength. And protecting that economic strength and shoring it up against the plagues of the last 20 years is very, very critical. Not since the time of Reagan, and before that, I don't remember when did we have such a strong and clear clarion call for, sound government. So this is very important, and we should get ready for these swings and roundabouts that are going to happen with the vicissitudes of the politics of it. So I just caution everybody in their trading I hate people trading the stock, by the way. I hate it. If you want to invest in the stock, I'm your friend. If you want to trade in the stock, sorry, Xander.
That's good.
I don't understand. It's not that I don't understand trading. I don't abide by it. So all I can say is that this is a new factor. It's a factor that's definitely impacting the stock both up and down. It will have these impacts on the stock. And so if you are buying or selling options, if you are going short or going long on the stock on a short-term basis, and if you're buying on margin, just beware. And if you're buying on margin, don't. But if you're dealing in options, I strongly to be very cautious.
Yeah, it's a true gamble. I think that, and that's fair enough. And people should understand their risk perspective, should understand how much other cash they have if they never see that money again. And but I think you said very wise words on the political factor. While Tesla is today at 420, which was close to the former highs, in a much stronger position, fundamentally in a much stronger position, with many more businesses coming to fruition and bringing both revenues and profits. There is now this political factor, which has a very strong positive component to it, both medium and long term. I mean, the next 4 years are going to be much easier for Elon and for Elon's companies than the last 4 were. There is also now the factor that this is a bit of a political stock. So you will have, because Tesla is the only publicly traded company where this can transpire. So you have a little bit of this Elon political factor. I said that prior to the elections that Tesla has become a Trump election stock, and I was right. And I think it is still now a Trump political stock. There will be boosts to it, but there will also be moments where it's going to be cringy for us, just because that's the way it goes. There's also the other point. I know I'm boring you with this, but there's still 4 law cases outstanding in Delaware, and there is still a judgment coming on that settlement case where she has to decide on the amount of lawyers' fees. So there will be moments where we will still have some pain from the good old days in Delaware, that will reflect in the stock price. So don't just think it's only on fundamentals and can only go up. There's still going to be some pain, but we've been used to pain the last 3 years. We should be able to see through this now.
I love the messaging on the risk. I mean, Alexandra walked us through like these recent legal cases. Larry walked us through the tightrope that's being walked politically, but I think we all agree we're going in the right direction. And then there's product execution risk as well. This company is taking on areas in product that no one's ever done before. And we spent some time talking about the relative improvement and how important it is to measure that. But there is an end game, and the end game that's been promised is robotaxi rollout next year. So you've got this combination of a company and a leader that is taking on, they look at risk in a completely different, outsized way. And it appears he has a skill, and I think others have talked about this publicly, of managing risk and an ability to see it and manage through it and take it on at an outsized level better than anybody else out there. But legally, there's legal risk, there's product risk, there's political risk. There's a lot of there is risk out there, but when you look at this relative execution of what they're doing, you have to sit back and like, holy cow. I give this one quick example for people, and I'm going to probably write a quick article on this because I come from the mobile phone industry. And that is, here's a quick thought experiment. Take your phone out and put it on the table and look at it. And then just hit the screen to wake it up and look at the icons on the screen. You doing that and like whatever you do with your phone, right? What you see today is pretty similar to what you saw 5 years ago. It really is. I mean, the screens are a few tenths of an inch bigger in general, but in general, what you're seeing on Android and iOS and what you do as a user is pretty similar to what you did 5 years ago. Step into your Tesla from 5 years ago and and then go drive. Okay, so the driving experience is similar. It's improved, but now you can get in your Tesla. You can say an address. You can press one button on the screen, and 99.xx% of the time, it's getting you to your destination. It's backing out of parking places. It's changing lane. It's doing things 5 years ago you would have never thought that. So when I look at the relative pace of innovation of this company and what they're building, and actually the status of where they're at with real world AI versus everything else, there's nothing comparable. And the mobile phone, like that industry is gigantic. It is enormous. There are millions of engineers working on these products, and there's billions of dollars of R&D. But if you look at the relative improvement, it's pretty mind-boggling.
Well said.
But let's in a spirit of disclosure, right? There was this guy that said Larry speaking to a room of gamblers, all looking awkward. Let's just clarify each of our investing strategies. So let's start off with the fact that we call this CyberBulls. This particular panel, we are the people who are Tesla bulls. I will, address the fact that some people say, "Oh, Herbert only brings on bulls and doesn't bring on bears." That is, I don't think, true. If I can find a bear who has good arguments that truly believes that they're correct, I'll bring them on. And typically what you'll have is somebody who is a bull but not as bullish as others. When you have a real bear, I often find that you break it down and they're not actually credible. Like a lot of things they're saying is just completely like made up. If we can find somebody who's a credible bear, please bring them on. We'll bring them on. I'm about to interview Dan Ives and Gary Black. Now, Gary Black is a bull. He's just not as bullish as others. And so then, that's a great person to ask how you think about things. Okay, so that's one. No, not financial advice. Every single person is in a different position as themselves. You should, figure out yourself. But let's go down the room here. Our philosophies and thinking. I'm a long-term buy and hold person. I own as much Tesla as I can own, but I still also own Apple, and I own Amazon and a few others because they're in my Canadian stock accounts that I cannot buy or sell, which is all great. But if I could have if I could have touched it, I would have switched them all to Tesla, just because of, again, we've confirmed this. That is my philosophy, and that's how I think. And then why don't we go with you, Larry, and then Jeff, and then Alexandra, then Xander.
Well, my philosophy is very, very risk averse. I try and limit my exposure to stocks to a relatively small percentage of my portfolio, and I try and carry a large percentage on my portfolio in cash. And that's because, I used to be in private business. I was a venture capitalist. I founded several companies. Each time I found a company, I'm taking enormous risk, particularly as I fund them. I tend to fund them largely by myself, tend to bootstrap them. And so taking that kind of risk, any spare cash I have, I want to conserve very cautiously. And so I only take a small proportion of that and invest that in stock. I used to spread that across 15 to 20 stocks, but soon found that my winners rapidly became a very, very large proportion of my funds and started getting me out of those percentages. So I've tended to concentrate my risk very heavily in stocks, simply because the stocks I keep to this percentage. So, Tesla is my principal investment by far, and I've very seriously considered in recent times increasing that even more against my philosophy, because I think these are very good times for Tesla. And I've done very well by concentrating my risk very heavily. Even before the days of Tesla, I concentrated heavily in Amazon and Nvidia and several stocks that have done very well. But right now, I would say, as far as stocks are concerned, I'm pretty much all in on Tesla.
Hi, Herbert.
Okay, here next.
You put non-investment advice under there. Was
I
that
love
you?
it.
Jeff,
Yeah.
you're the best.
My philosophy is we're talking to tens of thousands of people, and I just think this is gonna be almost like a random number. I know there's people are interested of like, what do you do? How do you do it? It's difficult because you really have to understand your own situation, your own time horizon, your own risk tolerance. I say this over and over. I sound like a broken record. I apologize. I just look at this whole situation differently, and I don't know how helpful it would be. But I mean, I'm obviously invested in Tesla and very bullish on the company. And I tend to look at tech stocks and try to understand the business, understand the leadership. Are they visionaries? Are they building something that's truly unique? Kind of red ocean, blue ocean, looking at, is this something that's unique? What's the probability of success? And in kind of, where are things moving fundamentally from a technology perspective? So yeah, but I don't deal with options, don't deal with anything on those sorts, because you're really trying to guess the stock price or kind of movement on a certain date. And I think that's humbling. That's very difficult to do. But I think everybody should kind of do what fits their lifestyle. If you're 20 years old and whatever, like, I mean, there's different things you do. I think Larry kicked it off, in terms of his approach and his risk tolerance. I think it's just different for everyone. So I just leave it at that.
Alexandra.
Yeah, I mean, I explained my story a lot of times, so maybe just a quick update. So I'm today 100% in Tesla. And it's also because I don't have the time to look into any other stock the way I look into Tesla. I really have the feeling I understand this company. I may not understand the technologies of lots of things in the car, like the battery management and all that, as much as others are in our Tesla community. But I listen to them and I get my information from them. So I feel I have reliable sources, which I don't have the feeling I have in any other stock. I don't have the feeling there is such a community out there that has so many experts in the field, and I mean, retail investor experts in the field, that you can even compare it. So I never went into Nvidia. I never went into any of the others. I did at one moment diversify a little bit into ASTS, the satellite company, and I went out of that in the last couple of days. Why did I do that? First of all, because SpaceX is making enormous progress with their direct to sell. And we just know what it is. When Elon gets his hands on a solution, the competition is just not going to go there anywhere. So that was my reason of getting out in ASTS, and I put all that back into Tesla. Actually, some of it above 480 yesterday. So, and I had no problem with that, because my stock, I never sold a single Tesla stock. What I did buy and sell is those sometimes goes up to 20% above 100%, right? So the 100% Tesla stock is in there. I'm 58 years old. I don't consider I need any of this money for at least 7 to 10 years, and probably even not then. So I earn my daily living. I don't need any of my investment money for, paying my kids' colleges or whatsoever. I work for that. So I feel like that money is just sitting there, and I add on and I add on and I add on, and I'll add on again on the 1st of January. So that's that. And then, so my only gamble is options on Tesla, because I want to stay in the company I know best and where I feel I have really made a risk assessment, and follow all the trends and try. I mean, do I think I understand it 100%? Obviously not, but nothing else I understand even half as much as I understand Tesla. So my gamble money sometimes goes in a leap and just stayed there for a year and a half. And that's what happened to those 300 leaps of January. Like I told you, I think I bought them at 38. At one point, they were close to 10 or 12, and I was crying my heart out. I was not crying, but I mean, it was clear I would lose that money. And now they're at 140 again, 150, and they were at 180. So that gamble worked out. And there are periods I have no gambles there, and there are periods I add to them. I'm again never would exceed probably 20% of what I have in Tesla stock, but that is real gamble money, of which I know if I lose it, I'm not gonna have a heart attack. Or I mean, if I win, great. I put most of that into my Roth IRA, so that if it is a good win, I don't even have to pay taxes on it, and that's it. That's it. So that's I mean, it's actually very simple. For somebody who was brought up, diversify. I threw that all out of the window, and nothing of that exists anymore. And I just have nothing comparable that I would trust. I don't trust interest rates. I don't trust any other stock. And so that's it. Here I am.
Thank you, Alexandra. Wow, that was very, shared quite a bit there. Xander?
So I'll start with this. Buy and hold is the most tried and true way of investing. You talk to the Jason DeBolts, the Stephen Mark Ryans. This is what they do. They just keep buying the dip and dollar cost averaging. I did that for the longest time. And when 2021 sell-off occurred, I had to try to understand how did we go so low? And the options market helps me understand that. So where I am now is I have like multiple different buckets. So this is what works for me is that I have this long-term portfolio, don't sell covered calls, don't do cash secured puts if I could help myself. And because I got margin called because of those not cash secured puts, but just selling puts on the long-term portfolio on the way down. So that portfolio is the do not touch portfolio. And then I have a trading portfolio, which has really, really helped me change my philosophy on this long-term portfolio, because it's just like that bucket is different than this bucket. This bucket is, its job is to, since I can't sit on my hands, and that's my nature, you have to understand your own nature. So I can't. I have to do something. I'm a doer. I'm not a, not a sit on my hands kind of person. So I also have a business account, and in that account, like right now, my Roth and my business account, they're in just shares. I have a fiduciary duty to my business partner that I will not lose money, so I can wait out any storms that come. So that's kind of been my philosophy. I'll tell you a few other things. Being a gambler in the casino and buying these weekly calls and like thinking that stonks only go up, like that's not me. I think that there's a time and a place. The market has this options thing, and it's literally the casino, right? Everyone calls it the casino is open, but there's two sides to that. There's the bears and then there's the bulls. I tend to believe in the long-term vision of the company. If you look at that post that you started the show with Elon saying that basically the coast is clear for autonomy, that to me is the big picture thinking, where short term I can play around and I've done exceptionally well over the last 3 months and in the trading portfolio. But that forcing function that I mentioned earlier, where I sell on the way up and I miss out on gains, and everyone talked about how 420.69, don't ever let those shares go. Well, today was a great example of where, as I let those shares go at 450s and 460s and 470s, well, now I have another bite at the apple. So, but I feel comfortable doing that because I have this short-term trading portfolio, while others do not. So I don't recommend options trading for anyone, except if you truly enjoy this, because the emotions, you have to be able to handle them, because like yesterday, as an options trader, you feel sick if you're bullish, and especially if you're taking on margin or something like that. You literally physically feel sick, and that's not for most people. I'm a motorcycle rider, daredevil. I've skydived. So that's my nature, and so long story short, play to your nature, and just be careful, but don't ever lose the long-term vision of why we became the CyberBulls.
Oh,
Did you
okay.
see that the stock just rebounded at 420? Isn't that crazy?
Nice double bounce. Yeah. My
Yeah.
guys are buying
So a
double
couple
shares,
quick
yeah.
points for me. One is with the reason we started CyberBulls. Remember, Xander with Christian, was because each of us had different investing styles. And that was really interesting to learn and understand from each other. I also want to clarify for people, whenever you hear somebody say, I'm all in Tesla, just know that sometimes they don't mean what you think they mean, right? They will have cash, they will have real estate, they will have other kinds of bonds or commodities or whatever it is. When they say all in stock, I think they're meaning that the bulk of their money in stocks might be in Tesla, not others. And so every person has their own style. And then I just want to thank the panel for being so transparent. This is, I'm sure something that people want to hear is, we are willing to share information. And I tell you, when you hear a Tesla bear and they're just attacking you, why aren't they showing their face? Why aren't they sharing their story? Are they short or not, and so forth? And until you share that, then it's not worth conversing with you. We don't know who you are and what you really mean. So, anyways, this is CyberBulls. Hopefully, you guys found some value in this. I really appreciate the panel members. Follow everybody here. If something they said resonated with you, you got Jeff Lutz, you got Alexander Mertz, Xander Sky, and Larry Goldberg.
Enjoy
Thanks,
your
everybody.
vacation in Hawaii by yourself, Herbert.
With my family, okay? All right.
Without us.
You are my family. It will happen. See you guys. Bye-bye.
Bye-bye.
Yeah.